Tim, Tom, let's start off by introducing yourselves and your backgrounds and why you think those backgrounds will help you in investing in dividend growth.
I'm Tim Casaletto. I've been at Wellington since 2014. I joined the dividend growth team at the start of 2025 after spending nearly a decade on the energy utilities team covering infrastructure sectors, working directly with Tom here. I think infrastructure in particular lends itself really well to dividend growth investing because there are a lot of long-term capital compounders within infrastructure. And I think being an investor in that space, it really forces you to focus on things like capital allocation, balance sheet strength, value creation, which are all attributes of the dividend growth philosophy. So I think the background is very, very helpful. As I mentioned, I did start on the team at the start of 2025. And since starting on the team, I've really been focused on strengthening the portfolio positioning, integrating better with Wellington's ecosystem of global industry analysts, our sector experts, people like Tom, and really just integrating more with risk management into the portfolio construction process.
Yeah. And I'm Tom Levering. I've been at Wellington for 26 years. For 25 of those years, I've been managing money in sector funds, most recently in the Vanguard Energy Opportunities Fund, which I've run for about 6 years. So looking forward to the opportunity to working with Tim again and to bring the money-making skill to dividend growth.
Why the conviction to dividend growth?
I just think it's a really great pond to fish from, this idea of investing in these long-term capital compounding businesses with a growing dividend stream. In some ways, I actually think of that dividend growth as an output. In order to have consistent dividend growth, you really need to be a company that invests at strong returns, have strong free cash flow, have a great balance sheet, and have a management team that balances this value distribution and value creation effectively. And Tom and I worked together, as I mentioned, for 10 years, and we worked together so well, I think because we share an underlying investment philosophy, but we have a very strong mutual respect for one another where there is constant, healthy, rigorous debate between us. And it just happens so organically that I think that really allows us to avoid groupthink despite having similar philosophies.
Talk about how the two of you plan on leveraging that platform in the Dividend Growth Fund.
Historically, what the Dividend Growth team has done is we've leveraged Wellington's great network of sector experts. There are over 60 global industry analysts at Wellington, and we have pulled ideas from them that are consistent with our underlying investment philosophy to have one sector expert for each of the major sectors that we really consider our conduit between that sector team and the portfolio management team. That sector conduit will have a very deep understanding of the dividend growth philosophy as well as our opportunity set and can push us ideas rather than us trying to pull ideas from them. We do think we have an edge, especially with Wellington's great research team, to drive stock-specific alpha, and that's really where we're going to focus.
Yeah, and I think a key point, which I think I made, but just to reemphasize, is we believe in this benchmark. We believe that this benchmark provides a very strong beta and potentially a positively cyclical one at this point. And our ability to add alpha on top, I think, means good things for shareholders. I feel like we are at a cyclical low and that the opportunity from here is for us to add outperformance on top of what should be a good strong performing benchmark.
To be clear, Tom and I will have ultimate responsibility for all stock selection, all portfolio construction, all risk management. And this underlying philosophy of, again, investing in these great businesses, the way Tom and I approach portfolio management is that we would like the vast majority of our relative performance to come from stock picking.
In a client's overall portfolio, what role would you say a dividend growth strategy would play?
I think dividend growth can provide exposure to broad markets and allow clients to participate in up markets, but I think its real role in a portfolio is as a core allocation.
For clients deciding between the Vanguard Dividend Growth Mutual Fund and the newly launched active ETF VDIG, what are some of the key differences between those two products?
I think it's important to know that these two products are very, very similar. They share the exact investment philosophy. The one nuance is that the ETF is a little bit more concentrated compared to the mutual fund, but the underlying philosophy, the underlying portfolio characteristics are much more similar than they are different.
Looking ahead, what should clients expect from performance across different market environments?
The objective really is to outperform through stock-specific alpha, and we should be doing that in up markets and down markets relative to our benchmark. Clients should continue to expect a very resilient portfolio that has favorable downside capture versus broad U.S. equity indices.